John Piper with the weekend video, and it's Saturday the 12th of December. I want to start with this YouTube video called Gold versus Bitcoin emergency webinar. I suggest you watch this all the way through. Actually, it's quite interesting. I think it's critically interesting, in fact. This is from a guy called Minesh Bindi, who runs Perfect Portfolio. It's a guy I've actually recommended in the past. He runs a gold portfolio, and he set up something else more recently. But what happened around 6 weeks ago or so, in the middle of October, Wall Street and the US government started saying things like Bitcoin is gold Mark II. And that, what people say in government is often misleading, I think. One says lies, damned lies in government statistics. It's a familiar phrase. I think Private Eye used to use it quite a lot. About what the government says. However, what's happened is that since that event happened, and the video explains what the event was and why it's relevant, there's been this big rally in Bitcoin and a relative fall in gold. Now, this is quite critical because I've been saying that both Bitcoin and gold are seeing a correction from which they'll both recover. Now, if the fact of the matter is that gold is actually out of favour on Wall Street because of the reasons that Minesh goes through, basically that the gold sort of old hat, the governments are switching to digital currencies, blah, 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 then this is critically important for gold investors. Now, I've been plugging away at Bitcoin since 2016, having been introduced by Graham Laurie, who mentions Minesh actually in a comment in the crypto room, in that he was an idiot 4 years ago, whatever it was. But he's changed his mind, and the mark of the true idiot is they don't change their minds. And when you see something like that, I have noticed this. I think what he's saying now is actually critically important. Well, the chart's also interesting because we have the correlation down here where they were correlated, and we have it now, of course, where they're both correcting in a similar vein. Not quite sure why the Bitcoin chart doesn't show that, because they are, the two patterns are fairly similar. Maybe there's a difference in the time frame. Anyway, quite important. If you're in gold, as I am, quite heavily, it may be worthwhile thinking about getting out of some of that gold, as I'm now thinking about that, and perhaps adding some to Bitcoin. Not all of my gold to Bitcoin, but maybe a reduction in my exposure. Having said that, I want to look at the chart patterns, which we're about to do, of course. And so let's get on with that right away. Here's a chart of Bitcoin, and basically had this big A, B. Now I've got a double bottom, got a new low here, so I count that as a C wave. This rally is so far, it hasn't done too badly. It's gone from 17.5 up to almost 1,000 points, but no clear pattern on that as yet. So it could be a corrective move. It depends how you count the rally, the moment. If it's just this bit here, then we're now bouncing around the 61.8% level. Around 1,7600, almost exactly actually. So I suppose that's encouraging to an extent. It looks like it should be complete. We just had a bit of a clearer rally. Let's have a look at that rally just to see exactly how it looks. It has a 5-minute chart, so that could be a 1, that could be a 2. It looks like a 1, 2, 1, 2. I think that could be a 1, 2, 3, 4, 5 perhaps as part of 3. 3 I guess could be up to there. 4 could be in process. It's a pretty vague count, but rather messy. Obviously, we've got the third of a third there. That's encouraging. So 1, 2, 3, 4, 5 there. 4. That could be it's not not an ideal pattern, but I guess it does show some promise. So it may be we've seen a low on Bitcoin. Of course, the video I've just been quoting from is very positive of Bitcoin. It's gold where the worry is from what this guy's discussing. Anyway, so if that continues, then we may well be on the up now on Bitcoin. All right, as far as Ethereum is concerned, looks like a fifth wave. A, B, C, D, extended E. Looks like we could have seen the low. Let's go down to a 5-minute chart. Okay, well the decline is extended, so that's the low down there, I guess. It may be that the B wave actually is here, the A wave is to here, that the count here needs adjusting for the 5 waves up. But again, this is, 1, 2, 1, 2. I guess this could be as a one of three. I mean, same kind of basically same as Bitcoin. We have a rally. It has potential, but it's really yet to realise that potential. I think we do need a sharper thrust really to confirm that we have seen a low. It's just not that clear right now on either Bitcoin or Ethereum. But it seems to be no major worry on Bitcoin or Ethereum. You know, the video I've quoted, the factor guy mentions, are very positive for the cryptos. It's gold where the worry lies. So let's switch to a chart of gold. All right, well, the chart of gold actually looks better at the moment. So I think I'm counting this as part of three. I mean, the count's a bit obscure because I can't see 5 waves here. I've got a 5 there. That's a 2 and this is a 3, but this is far too big for a 4. So, the count isn't ideal, but from this point here, the high we saw back in August, we've got a clear ABC. This is an ABC here. Got 5 waves down there, but that's a C wave, so you'd expect that. We then go down a leg to the shorter term, the hourly chart. So from the low, we can count a 1, 2, 3, 4, 5. That's quite a neat count, in fact. And we had an A, B, and a C, perhaps, with a rally developing. Let's go down to a shorter term chart again. So on gold, we've got 5 waves, like a bit of a fiddly 1, 2, a decent 3, 4, 5. Then got this sell-off, ABC bounce, ABC C wave, and we've got this new rally developing, which looks like a great buying signal off with 50% retracement here. 4th wave support there. So in fact, we bounce off the 4th wave support. All looking pretty solid for a decent rally on gold. Looking stronger, looking stronger than crypto at the moment. Okay, this rally is not ideal. I think the 1's okay, the 2's okay. 3's rather messy. The 4th goes overlaps with the 1. And this looks a bit impulsive, in fact. So I can't say I'm terribly encouraged by the very short-term pattern. But this is quite a good response. And this could easily come alive. I guess it's similar to Bitcoin. We just need some confirmation of the low. We've seen some confirmation, but not really enough to get too excited about it. So for the time being, I prefer the charts to theories. I think the price action is more important than theories. We'll see how it goes. But for the time being, I'm going to save my gold holdings, but I'm going to be wary in view of the comments that Minesh has made on gold and silver. And see whether the charts start to reflect what he's talking about. But certainly interesting stuff, and that divergence on the chart does tend to confirm what he's saying. Silver is similar. A, B, C. Very correct looking formations. Let's have a look at the action since that low. Okay, we're all a bit messy, but let's extend the fibs up to this point here. Just think it's pretty more comparison. I mean, this could be a 1, a 2, then a 1 of 3, but this is quite a big correction. So maybe we should just count 5 up to there. Okay, put that as 5 of the whole move. I've got an ABC down to here, broken 38.2%. It's found support on the lows here. In fact, quite a few lows, really. So, I mean, the key support is clearly around 23.56 on silver. And it just needs to, prove itself, which is the story of this video so far. We have setups, we even have spikes to buy, but we haven't got any proof, any sort of solid evidence that these moves are going anywhere on the cryptos or gold and silver. But gold and silver are looking better than the cryptos right now. So, but I guess it's all rather inconclusive without some confirmation. So, anyway, I'll leave that where it is for the time being. Go on to the next market. We're looking at FTSE, and we've got the 5 waves up, 1, 2, 3, 4, and then a 5, suggesting a bigger fall. Of course, we're right at the beginning where we expect the Christmas rally. So let's go down a leg to the 5-minute chart. Just press pause again. It looks more positive, so maybe that's a 1 of 5, sorry, wave 1 of a 5th wave. A, B, C, maybe 1, sideways 2. So again, I would say the chart supports the idea that we're going to rally into the Christmas period at the moment. What happens after that, we'll deal with at the time, I think. So on to the next market. The DAX, pretty messy. I mean, we've got possible 5, with the 5th continuing. But this decline has taken us back below the low of 4 pretty much. So maybe 4 should be to there, perhaps, I don't know. It's really messy. 1, 2, but I guess it could be a 1, 2, 3, 4, 5 rising wedge. A two-way, pretty sharp, I guess, on the Brexit news, which has thrown everything into chaos again. We were thinking of travelling back to the UK. In fact, I'm not sure how easy that might be, perhaps. But I don't know. I think, I think things will be pretty messy next year by the looks of it. With cryptos maybe being a shining light among other markets. Although gold still looks good, I think. Anyway, again, I think there's a spike there. I think in the very short term we have some support for more upside. And the Dow's more the same, really. 1, 2, 3, 4. I mean, I've got this really weird fifth wave, maybe a rising wedge. 1, 2, 3, 4, 5. That would actually fit quite well. So rising wedge, fifth wave, taking us into the Xmas period. We can all celebrate the lockdown, I guess. Which I think like well, anyway. On that, I think I'll call it a day. I found that interesting, useful. Back to the reports on Tuesday for subscribers. I mean, it still looks like gold and cryptos are going to see a very strong rally coming in sort of any time soon. But obviously there may be contrary indicators that arise. Have a great day. Have a great weekend. Thanks for listening, and bye for now.